Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Two mega cap companies are our top stock picks of the week. I'm Tracey Ryniec, and I'm joined here at the chairs by Brian Hamilton. And Brian, we're going to start with your mega cap, Cisco.
Yep.
Now, I haven't thought about them for a couple of years, to be honest, and it sounds like maybe I should be thinking about them now. So what's going on with Cisco?
Well, Cisco recently reported earnings last week where they easily beat both the Zacks consensus earnings and revenue estimates. But what the really big focus has been is on revenues. As you said, haven't been really paying attention to it because they've had declining revenues over the past 4 consecutive quarters. But the company switched around its business models, going more to a subscription-based business, and the revenues were actually up 3%. They also saw improving gross margins and stronger free cash flows. Now, this wasn't an isolated quarter either, because management is now expecting fiscal year 2018 revenues to grow between 3 and 5%, which was well above what analysts had previously expected. Now, also because of the improving revenues and free cash flows, management increased their dividend payment by 14% and then also authorized a $25 billion share repurchase program.
Wow, that's a big one.
Oh, huge. And they also had about $6 billion on their previous program, so they had about $31 billion in share repurchases. And they're expecting it's going to take at least about 3 years to get through that whole area. Now, given this great news, increasing in strong revenues, a share repurchase program, and an increase in their quarterly dividend payment, analysts went crazy after the report. And if you can see here, I've highlighted where you can see we have unanimous agreement on the upside. All across the board, everybody's up. There's none in the last 7 days because they recently reported in the last week. This obviously also increased their earnings estimates for the next 2 quarters and the next 2 years. You can see highlighted in yellow. But the bigger thing is, and for the owners, as you can see here, the huge increase in stock price as of late. As you said, if you can look back where it's just kind of muddling around for a little while, and that's why nobody's really paying attention to it, because they really weren't building into new revenues, because they were switching over their business model. Now it's really starting to bear some fruit. The company's going to pay us a solid 2.6% annual dividend yield too. So we have revenue growth, share repurchase program, increased dividends. Everything's looking really good for Cisco through 2018, and they're expecting this to continue into 2019 as well.
Yeah, this is a company that most people do kind of keep on the sidelines because those shares were stuck in this narrow range, as you can see.
Right.
But yeah, nobody, well, not many people, some lucky people are, you know, in it and have been riding this new Cisco.
Oh yeah, this jump over the last 4 or 5 months has just been amazing for the company. As you said, given that how it's just been sitting in that little trough for such a long period of time.
Yeah. Okay. Good things. Good news about Cisco. That's also good for the global economy, I'm assuming too, because they're a global player.
Exactly. When we see the continued global growth, and we have the IMF continuing to increase the growth expectations across the world, which actually is even growing larger outside the U.S. as well. So their international exposure is going to be really beneficial for the company as well.
Yeah. Okay. I brought Home Depot. They just reported, but another good quarter from Home Depot. You know, they've been beating almost every quarter, so I'm not surprised they beat again. But the real key thing with the retailers is always the comps. And Home Depot's been the king of retail, basically, for many quarters now, as their comp is the best in the business. And then you do have to wonder, how much longer can they keep doing this, or can they keep doing it? And last quarter, holiday quarter, they did it again. U.S. comp 7.2%, which is just huge. Enormous. Yeah, especially coming year over year. People don't remember that the comps are year over year. So they were already doing really strong comps 1 year ago. Now they're doing 7% in addition to whatever they did the prior year, which was at least 5–6%, I think, a year ago. So you're talking 13–14% year over year growth at the same stores that have been in business a while. That's huge, but shows you the strength of the U.S. economy. But one little tidbit that people need to be aware of with Home Depot, they also have stores in Mexico and Canada, and over 100 in Mexico, and that comp, the total comps was 7.5. So if they're doing 7.2 in the U.S., but they're doing 7.5 overall, that means something good is going on in both Mexico and Canada to get that higher level comp overall.
This also goes to the global growth aspect, because we had the hurricanes, and then we also had the housing, which are coming up great here and domestically, but we're also seeing the big growth on Canada and Mexico. It gives us a bigger picture, a beneficial bigger picture.
Right, exactly. So Yeah, the whole North America seems to be heating up right now, and Home Depot is a way to play that. Now, they also did the same thing with the dividend that Cisco did. They had almost a 16% rise in the dividend, which is a nice little bonus for the Home Depot shareholders. And then I brought the chart, my price and consensus chart. It doesn't really get any better than this. Just the straight across year over year, basically double-digit growth here in the earnings that is just really consistent. And this is what you want to see even outside of retail, but especially in retail. And then you can see 2018, this is actually before today's earnings report. You can see that jump up because they did announce a couple weeks ago how they were going to be impacted by the tax reform and all of that. So analysts got even more bullish a couple weeks ago. So I'm expecting that maybe to be even a little bit better. Now, some people were a little disappointed on the comp for this year. They gave same-store sales comps of 5% for the year. But again, this is year over year. They already were doing, they did almost 7% for the year last year. I think it was 6.8. So to do another 5 on top of that, and Home Depot's always been a little conservative.
Well, it's also on your chart. You can see this isn't a flat chart like Cisco was for a long period of time. So a big one-off comp can be interesting. But when you're showing 7% off of already growing, that's really impressive.
Yeah. So, Home Depot, still the king of retail, still the area you want to be. People are still spending on their homes. And as long as the economy stays strong, the unemployment rate is down, people are still going to be going there.
Oh, yeah, for sure.
And they can't be Amazoned, I feel. I think this kind of puts it to rest. They cannot be Amazoned. There's competition there, but they're meeting the challenge.
Oh, yeah, most
Amazon.
Definitely, yeah. Especially after the last earnings report.
Yeah, so a couple good big caps here with the good dividends. Like the whole picture is good with both of these.
Oh, yeah, most definitely. I agree.
Okay, so if you want to know more interesting stocks, you can always check out all of our top stock picks of the week videos. We do one every week here at Zacks.com. Find it on Zacks.com. And as well, check out all the rest of our stock news and information on Zacks.com because I think you might be surprised what you find over there. And we'll be back again next week with more top stock picks.